Well, hello everybody, LA here. This is the inflation, deflation, hyperinflation, stagflation, disinflation, whatever it is, what's coming. I will talk about that. I'm going to give my opinion of what it is, and more than anything, I'm just going to give you some information that you can use with respect to how do you deal with whatever it is that's coming. You know, it's a big topic right now is do we have inflation? Do we have potentially hyperinflation? Is it deflation? And there's a lot of arguments on both sides. And you can always make the case for one or the other, you know, no matter what side it is you're looking at. My point, just as it is with NeoTA, forget it. It doesn't matter, right? What matters is being where you need to be when you get there. Right? Because there's so many variables. The probability of us actually nailing it, you know, a priori is like next to zero. So the point, in my opinion, is don't worry about what it is so much as what do I do about it, and how do I detect it as I go, and how do I position for it. And so there's a lot of notes with respect to that, the different cases that may be about to unfold. But in the end, just trust that the market's going to show you the way. And that will probably serve you best. Because with that, you can position yourself, right, in increments, just like we do with everything else that we trade, to position ourselves, you know, either heavily one way or the other, depending on what unfolds in front of us. So this whole question of inflation, deflation, my opinion is it's both. It's not one or the other. It's probably both. And if I had to lean towards anything, I'd lean towards stagflation. And the reason for that is we have a lot of deflationary pressures. And I think if you think about it as a sine wave, you have these big waves of inflation, deflation over time. And we've been in a deflationary wave for quite a while, ever since technology took off in the late 90s. The internet is a huge factor as part of that. But inside that, you've had spouts of inflation. So you got this deflationary trend with bouts of inflation as we go down. And, you know, I ask you, you know, might this be really the case? It's what I think is the case. And I think if you think that way, you know, these are the reasons you could consider it being this. Technology, as I just said, now you've got crypto blockchain, which is going to be just like the internet. It's going to be hugely deflationary when it unfolds, and I suspect it will unfold. QE and debt is also very deflationary. I know that they're pumping money into the system, but the more you stick in there, the worse it gets for the economy. And so you get malinvestment, you get all kinds of crap that takes place. The just-in-time manufacturing world trade stuff is all diminishing now. All of these things, these are major trends over a long period of time, and I don't see them ending. These are going to get just more disruptive as we go along. On the flip side, this whole ideal of world trade reduction actually increases cost, right, on the short term, because you have to move that stuff closer to home. You have to pay higher wages. That's why we did it, right? That's why you produce everything in China or Vietnam or some other place, because the labor's cheap. Well, if you bring that back home, you got to pay higher wages. Gets rid of the supply chain problem, but it creates a cost issue. You got wage inflation possibly. I don't know if this is going to stick or not. We'll have to see. Deficit financing. That enables current demand. That's why we get these big spouts, you know, like everybody wants to buy a house all of a sudden, and you get these huge run-ups in prices of houses, or everybody wants toilet paper, or whatever it is, right? Yeah, people have money, they can go do that because the government gave them a bunch of money, and some people still had their jobs and was able to make money, but all these things lead to short-term spikes in inflation, and I think that's what we're seeing right now. This interest rate suppression does the same thing. So if you think about how do you tackle the unknown, right? It's like we do with everything else. You postulate a thesis, all right? I think there's going to be hyperinflation, for example. And what does it mean if it is? And so what I've done is I've categorized each of these 5 things, what I think the effects are, and what benefits, what doesn't, right? And from that, you can go through these tables, the links provided. You can try to make sense of, okay, if we're getting into hyperinflation, if it looks like that thesis, the market's telling me that thesis is coming true, then I want to lean more towards this stuff and get away from these things. Same thing here with inflation, right? Lean towards these, get away from those. There's a lot of overlap between the hyper. It's just that the hyper is, of course, hyper, right? It's very fast. And so things are going to move a lot faster if in fact, we move to that. And things are going to get destroyed faster. If you look at the disinflation side, disinflation simply says the rate of change of inflation is decreasing. It's going down. And so that would be disinflation. And I think there's some question marks about, how do some of these things behave in that environment. We'll just have to watch because I don't know a priori. But I do think, where I have a question mark, I put a question mark. Stagflation. Now, this is the one I think is probably happening because I think you've got this long-term deflationary trend, but you've got an economy that's going to stagnate. And that's the thesis I've been running with for about 2 years. These things should benefit. I think the crypto is going to benefit as well. And when I talk about crypto and all these graphs, the stable coins, crypto is really blockchain technology and then the currency that people use to do the blockchain. And so they mine for these things, right, that prove the ledger sheet. Stable coins is an attempt to take blockchain and use it, not so much to use blockchain, but you could either use it or not. But to create these stable coins, almost like an ETF where you have physical gold, except for here you decentralize it. And you get some efficiencies as a result of that as well. But these stable coins, a lot of these are going to be backed by physical commodities. One of the members that asked me actually about this was pointing out a stable coin that is based on gold. These, I think, are probably going to make sense. The ones that are based on currencies, like, one's pegged to the dollar, USDT, I don't think I would want that. That seems like that wouldn't do very well, right? Fiat currencies are probably not going to do well. So if you peg it to something that's probably not going to do well, it's probably not going to do well. I think if you look at the platforms that are out there, Bitcoin, Ethereum, those two have the least risk. Everything else has a lot of risk. And that's because these are the big cap, basically, right? They control the vast majority of the market. And so things gravitate towards them. And so, if you want to take the more sure bet, it's with these. Now, Bitcoin doesn't have the platform that Ethereum does. And so Ethereum probably has, if you're talking about platforms, is a lot better than Bitcoin. But Bitcoin's massive. And it's the accepted terminology. Just like, you say you're going to Google it, right? Google became a verb. Well, Bitcoin's becoming a verb, so to speak. All the others are going to have a lot more risk. I like one called Solano. I've heard of others. There's even one called Neo that was pointed out to me today. Whatever it is that you choose, just realize there's a lot more risk on these others. But I think they have a place in your portfolio, especially in these inflationary, disinflationary, stagflation type situations. And then, of course, the deflation case. In general, note, there's a lot more opportunity probably than what I show here. And in fact, you can actually take inverse things of these things that go bad. So you can take an inverse to equities, for example. You're quite familiar with that because we've traded those. You also have to realize that these fiat currencies are just going to depreciate over time. The Fed's telling us they want inflation. And so what does that mean? That means they're going to depreciate your currency. And so over a long period of time, or even a reasonably intermediate term time frame, right? Currency is not where you want to be. Now, if you get into deflation, it's actually going to be beneficial for a while. But in the long term, it's not where you want to be. once you have your thesis and now you're looking to the market, right, then you constantly evaluate it. You say, okay, are these things that I think in the deflationary case, are these things happening? Are they proving that this thesis is true? If they are, then you're probably on target. And you want to, continue to do what you're doing. If it's not, you got to revise it, right? Here's an example I lay out. All of this, you got to wrap it up inside money management, because it doesn't matter unless you really put some money management around it with some reward to risk. The markets are not symmetric, they're asymmetric, and so there's going to be cases where there's a lot of risk, and you have to account for that. The bull in the china shop has been, continues to be central banks, and the Fed is the biggest of those. And so anything and everything the Fed does has a big effect. And so if the Fed comes out and does something, just like we saw China this week start to, destroy industries, if the Fed decides it's going to destroy a particular industry, or it's going to go in and start buying ETFs, that's going to have an effect. And so you have to keep your eye on the Fed because they have such impact. And, we're in a 13-year bull market because of the Fed, period. I mean, we wouldn't be there if it wasn't for the Fed. At some point, it's going to blow up. But until it does, it is what it is. And that's going to be true of these theses. You're going to have to draw your thesis, make up your mind as to what you think it is, and I'll share with you what I think it is. And right now, I still think it's stagflation coming. And work off that thesis. And, try to concentrate your positions in those things that would benefit, and try to stay out of those that don't. Recognizing that all the while, right, even though you may have a deflationary picture, big term, you're going to have these spouts, where you get inflation spouting up. And so if stagflation is true, you're going to see a bunch of these, and they're going to be rather rapid. And that's kind of what we're seeing right now. All right, I hope that helps. Take care. I'll see you next time.